Ever feel like you're trying to read the Forex market's mind? Like,
Yeah,
what is it going to do next?
right.
Today, we're diving into a technique some traders swear can help with that, called the Asian range.
Okay, yeah.
You sent over some interesting excerpts from the Inner Circle Trader about how to use it to maybe, hopefully, predict price movements.
Yeah,
So let's unpack this Asian range thing.
absolutely. And it's worth noting, this concept, it's not exactly brand new.
Oh, really?
ICT, he actually learned it from a trader named Chris Laurie, and he's kind of been, refining it, polishing it over time.
Interesting. So it's not like some secret, magic formula.
Right.
It's more like a tool that's been honed and refined over the years.
Yeah, yeah.
So when we talk about the Asian range, what exactly, what are we even looking at?
It's basically the price action, in a specific currency pair.
Okay.
That happens between, get this, 7 p.m. and midnight New York time.
Okay, that's oddly specific.
Yeah.
Why those hours? What makes them so special?
And that's where the why behind this Asian range, it gets really, really interesting.
Okay.
This theory, it's all about the idea of market manipulation,
Okay.
like big institutions kind of pulling the strings.
Right.
And the Asian range, according to this theory, can give us a peek behind the curtain, so to speak, at what they're up to.
Okay, I'm intrigued. So let's say, hypothetically, we're expecting a bullish day for a currency pair.
Right.
Like, let's use the AUAD example from what you sent over.
Okay, yeah.
How would looking at the Asian range play into that?
So if we're thinking bullish, a tight Asian range for IUD/USD,
Yeah.
that could mean these big institutions, they might try to push that price down first.
So they can buy low later. Classic.
Exactly. It's all very strategic.
Okay, but wouldn't that, trigger a bunch of sell orders and kind of work against them if everyone's selling?
That's the thing. It's all part of the plan. They're trying to trigger those sell orders.
Oh, okay.
They want to create that fear, that sell, sell, sell mentality in the market.
To trap them.
To trap those sellers. Exactly.
This is starting to sound less like trading and more like a game of chess or something.
A little bit, yeah.
So where do we fit in then? How do we, as traders, capitalize on all this?
Patience, my friend. Patience is key. We wait for that signal, that confirmation. If the price dips below that Asian range's low and then tries to climb back up to the top of the range, that's our cue.
Because that's when these institutions are going to step in and start buying aggressively, right?
Right, and that's going to push the price up.
Gotcha.
That break below the range, then that retest of the high, it's a strong signal those big players are moving in, and they're confirming that bullish bias we were talking about.
It's like they're leaving a trail of breadcrumbs, and we just need to know how to read them. But before we get too far, what about buy stops? Our source mentions he used to use those, before incorporating the Asian range.
Yeah, buy stops can still be super useful here, especially if you're worried about missing a really fast move.
Okay, yeah.
You're basically setting an order to buy automatically if the price hits a certain level, right? So
Right.
if that dip below the Asian range happens really quickly, you're already in.
So it's all about timing.
Timing and having the right tools ready.
Right, to act on those signals. But we really need to be sure about that bullish bias beforehand, right? We can't just rely on the Asian range by itself.
You got it. The Asian range, it's a piece of the puzzle, not the whole picture. You got to factor in the overall market, economic news, all of that, to confirm your bias before jumping into any trades.
Right. Like, if everyone's saying the market's about to crash,
Exactly.
probably not a good time to buy just because the Asian range looks good.
Exactly. Don't ignore the bigger picture.
It's like we're putting together a detective case. We're gathering all these different clues, all these data points to make the most informed decision.
I like that analogy.
Speaking of clues, how does this Asian range thing work when we're expecting a bearish day?
Same idea, just flipped.
Okay.
Now, those institutions, they're looking to trap buyers. They create this false sense of a bullish breakout.
So they might actually drive the price up first, even though everyone's feeling bearish.
Exactly. Get those buyers all excited thinking it's going up.
Right.
Then once they've got enough buyers in, they start selling and boom, price drops.
So in this bearish scenario, we're looking for a tight Asian range followed by a break above the range's high. That'd be our signal to short, right?
You got it. And just like with the bullish setup, that retest of the range's high after the break, that's crucial. That's our confirmation the big players are jumping in on the short side.
Wow. So it really does seem like understanding how these institutions operate, their tactics, can give traders a real advantage in the market.
It's all about leveling the playing field.
Right, because they have a lot of power.
They do.
But, like we've been saying, the Asian range, It's not some kind of magic bullet, is it?
Definitely not. It's a tool, and like any tool, it needs to be used correctly and with other tools to really be effective.
So you're saying you wouldn't just base all your trading decisions solely on the Asian range?
Well, no way. You need other things like technical indicators, keep an eye on the economic calendar, and just have a good understanding of how the market works in general.
It's like you wouldn't show up to a construction site with just a hammer.
Exactly. You need the whole toolbox.
You need your saw, you need your screwdriver, all of
It's
that.
exactly. The Asian range is just one tool.
Right, it's just one piece of the puzzle.
Yeah.
Our source actually suggests this whole idea of market manipulation through ranges. It might not just be a Forex thing.
Right. It's something to think about.
So you're saying this, like, deception, it could be happening in other markets, too.
It's possible, isn't it? I mean, if these big players can potentially manipulate currency markets, why not other places?
Like stocks.
Stocks, commodities, even bonds. It's worth considering.
So all those principles we're talking about, like identifying these patterns,
Yeah.
understanding the why behind them, and then confirming with other indicators,
Yeah.
you're saying that could transfer to other markets.
Yeah, it's about thinking critically, not just taking price movements at face value.
It's like always asking, why is this happening?
Exactly. What's the motivation behind this move? Who's benefiting? It's about looking deeper.
And not just in Forex, but maybe everywhere. Now, before we get too far ahead of ourselves, let's bring it back to the Asian range. For our listeners who are really excited about this and want to try it out,
Yeah.
what would you say is the most important thing for them to remember?
Start small, definitely.
Okay.
Don't go putting all your eggs in one basket.
Hmm.
Be patient. It takes time to learn and understand these things.
It's not a get-rich-quick scheme.
Definitely not. And never stop learning. The market's always changing. You got to keep up.
It's a journey.
It is a lifelong journey.
So we talked about what the Asian range is, how it might be used for manipulation. But our source, ICT, he's not all about theory.
Right.
He's big on practicality.
Right.
He actually encourages people to get their hands dirty, literally.
With hand-drawn charts.
Yes, with hand-drawn charts. What are your thoughts on that?
I love that. As much as I love my digital tools, there's something about actually drawing it out yourself. Plotting the Asian range.
Yeah.
Seeing those price movements with your own eyes, it makes it more real,
It's like the difference between, reading a cookbook
Yes.
and actually, getting in there and kneading the dough yourself.
Exactly. You get a feel for it.
Right. You get a deeper understanding
Exactly.
of what's going on. And
Exactly.
that's about immersing yourself in the details,
Mhm.
experimenting, really getting your hands dirty, literally.
And not being afraid to make mistakes.
Right. That's how we learn.
Exactly.
Now, speaking of getting into the details, let's dive a little deeper into how we as traders can use the Asian range to hopefully spot some of this potential manipulation and, hopefully capitalize on it.
It's kind of wild when you think about it.
It really is. It's like we're peeking behind the curtain, seeing the wizard at work.
Exactly. And just like a magician, these institutions, they're masters of misdirection,
Right, right.
They can use this Asian range to make things seem like stronger or weaker than they really are.
To lure in unsuspecting traders.
Exactly. So we got to look beyond just the price, right?
Yeah.
We have to try to understand what's motivating those moves. Like, why is the price doing this?
It's like we're trying to get inside a Wall Street shark.
A little bit, yeah. The more you study these patterns, though, the more you start to see it,
Right.
You start to anticipate those moves. But remember, it's not some, guaranteed thing.
Right. We're not saying there's a magic formula here.
Absolutely not.
It's more like the Asian range is just one tool in our trading toolbox.
Exactly.
We've got to use it alongside other things for it to really be effective.
100%. We still need our technical indicators, right?
Right.
Our economic calendars, and just, a solid understanding of how the market works in general.
It's about building that whole picture. But, our source, he suggests this whole market manipulation thing, those ranges we're talking about.
Yeah.
He thinks it might not be limited to just Forex.
Really?
You think that's possible?
Yeah.
That this, deception could be happening in other markets, too?
It's definitely something to think about. I mean, if those big institutions are doing it in Forex,
Right.
why not stocks, commodities, even bonds? It's not a huge leap, logically.
So you're saying those patterns we've been talking about, the Asian range, understanding the why behind it, confirming with other indicators, all that you could, potentially apply that to other markets.
It's all about being observant, asking questions, not just like blindly following the herd, you know?
Right, right. Do your own research.
Exactly. Think critically.
Question everything.
Exactly. Don't take anything at face value in the markets.
Speaking of questioning, I want to circle back to something you said earlier about confirming those signals. You can't just rely on the Asian range by itself, right?
Oh, absolutely not. Think of it like this. The Asian range gives you some clues, but you wouldn't convict someone based on clues alone, right?
You need evidence.
You need proof. So what else can we look at? Well, volume is huge. Seeing big volume accompanying those breakouts and retests, that just adds weight to the signal.
It's like that extra piece of evidence that really seals the deal.
Exactly. And then there's all our other tools, the technical indicators, moving averages, RSI, MACD, all that good stuff.
So we're looking for those to align with what the Asian range is telling us.
Exactly. They can provide that extra layer of confirmation, or even, sometimes they'll throw up a red flag, a divergence maybe, suggesting the Asian range might be leading us astray.
So we're basically building a case for or against a trade using all these different pieces of information.
Exactly. And the more experience you get, the more you'll develop your own sense of what carries weight for you.
It's like anything else, The more you do it, the better you get at it.
Absolutely. You develop your own style, your own intuition. It's a process.
It is. Now, for our listeners who are eager to dive in to start putting these ideas into practice, what would you say is like the most important thing for them to remember about incorporating the Asian range into their trading?
Start slow.
Yeah.
Don't go all in right away.
Yeah, dip your toes in first.
Exactly. Test the waters. Be patient because it takes time to really understand this stuff.
And it's easy to get caught up in the excitement, right?
Oh, absolutely. But remember, it's a marathon, not a sprint.
Don't risk more than you can afford to lose.
Words to live by. Trade smart, be patient, and never stop learning. That's the key.
Solid advice. And one thing that really struck me about our source's approach, he's all about getting back to basics.
Yeah, the hand-drawn charts.
Exactly. There's something to be said for that, isn't there?
Totally. It's like in this digital age, it's easy to get caught up in all the fancy tools and indicators.
Right, all those bells and whistles.
But sometimes you just got to go back to the basics. Actually, drawing out those charts, it forces you to slow down.
To really look at what the market's doing.
Exactly. You see those patterns differently,
It's like when you write something by hand, as opposed to typing it, you remember it better.
That's a great analogy. It sinks in differently.
It's a different kind of engagement.
Absolutely.
So even if you're someone who loves their trading software, maybe give the hand-drawn charts a try. See if it changes your perspective.
It just might surprise you.
Yeah.
And you never know. It might even improve your trading.
Exactly. Always be open to new ways of looking at the markets. Now, I know we've covered a lot of ground here, and I don't want to overwhelm our listeners.
Yeah. It's a lot to digest.
But I think it's safe to say this whole concept of the Asian range, it's really got us thinking, hasn't it?
Absolutely. It's opened up a whole new way of looking at the markets.
It's made me question a lot of assumptions.
Me too.
Yeah.
It makes you realize just how much we don't know,
Right. But that's exciting, too.
It is. It's all part of the learning process.
It keeps things interesting, that's for sure. Now, I don't know about you, but I'm really curious to hear what our listeners think about all this.
Me too.
It really does feel like we've, only just dipped our toes in the water here.
We've only just scratched the surface. There's so much more to uncover with this whole Asian range thing.
It's like we've been handed this, treasure map.
Yeah.
And now it's up to us to actually go out there and find the buried treasure.
Exactly. And you know what? The real treasure, it's not even the money. It's the knowledge you gain along the way.
All right. The journey is part of the reward.
Exactly.
I like that. Well, as we start to wrap up our deep dive into this whole Asian range thing,
Yeah.
I wanted to leave our listeners with a bit of a thought-provoking question, something to, chew on.
Hey, hear it.
So we've been talking about Forex, right?
Mm-hmm.
But our source suggests these patterns of manipulation, these ranges, they might exist in other markets too.
Right.
So that begs the question, where else could this be happening? What other markets or assets should we be looking at?
That's such a good question, and it really speaks to the interconnectedness of everything, These financial markets, they're not isolated. What happens in one can definitely ripple out and affect others.
Totally. It's like a domino effect.
Exactly. So whether you're into stocks or maybe commodities or even, something like crypto, Keep those eyes peeled.
Question everything.
Exactly. Do your own research. Look for those patterns. And, most importantly, don't be afraid to think differently.
Love that. Don't just follow the crowd blindly. Think for yourself.
100%. And you never know, you might just uncover something amazing.
You might be the one who cracks the code.
Exactly.
Well, folks, that's it for our deep dive into the fascinating and maybe slightly manipulative world of the Asian range. Hopefully you've learned a thing or two, maybe even sparked some new ideas for your own trading.
It's been a pleasure, as always.
The pleasure was all ours. And to everyone listening, until next time, happy trading.